I'm Jeannie Bernick with Top Producer Magazine, and I'm here with Jim Bauer, Bauer Trading. Jim, you're a big fan of the sell and defend strategy. Why don't you tell us a little more about that?
Sell and defend is almost stamped on the forehead of Bauer Trading. That's kind of our motto. That's something that has been useful to our producers, especially in the last 2 or 3 years where we've had such dynamic markets. We've had some record prices. Our theory is, looking at it from a producer-grower standpoint, when you get a degree of profitability that's probably at the top 5 or 10% of your career's high mark, we really like getting that cash crop sold, getting the money in hand, reviewing the tax implications of the revenue that's coming in, looking at the input cost for the inventory that's going to be produced next year, and try to find some degree of balance where that sell and defend strategy comes into place. Now, the defend part is if we do see a weather problem develop or we see a change in the market structure, we can come in and buy some kind of call option to defend that sale. Bauer Trading is not a big advocate of put options, and the reason that we really don't like the put option strategies is that over my career, which spans almost 40 years, I've seen so many put options expire. And secondarily, if you're a cash producer, that put option only lays a floor. It does not determine the price that you're actually going to be selling the crop at. So many times the producers have a great idea on a put, but they fail to sell the crop at the higher level because they're going to wait, or they feel they're protected to the downside. So again, obviously some brokers are going to argue with that particular concept because they feel it's easy to do and it has worked for them. But in my career, I can't say that. We definitely are in the mode, into the program with these growers to sell it, either sell on the board or sell it cash, get the price where you know where you're at, and then if you have some degree of uncertainty about the upward potential, buy a call option.
Now, here today at the marketing rally, the Farm Journal Media Marketing Rally in Chicago, we talked quite a bit about what's affecting the markets coming up in 2010. And one thing that you brought up today was weather. Tell me a little bit more about why you think weather is so important this year.
I thought the symposium was really great. There was a lot of really intelligent people there, a lot of great ideas, but I was actually surprised, as you and I talked off air, that really one of the really big components of grain price determination, especially at the levels of price that we're at now, is the weather and the weather events that take place during the course of a growing season, not only in the United States, but all over the world. And really, the United States particularly, and China too, has been extraordinarily fortunate to have the kind of weather we've had over the last 12 to 13 years. In fact, I think we've only had one corn crop, below trend line in the last 13 years. And I've been around a long time. Some year, we are going to have a very bad crop, well below trend line due to probably bad weather in July or August. And if that ever happens, as big as the demand base is, particularly for corn, worldwide, where there are only certain countries in the world can produce corn, I believe that we could see the most volatile, violent corn market we ever have seen. So I was a little bit surprised that they really didn't bring too much impact on the weather, but being a trader and broker as many years as I have, and growing up on a farm and a ranch and dealing with hundreds of clients, personally, I know just how extremely important it is to know what the weather and the weather impact is on a crop.
Very good. Thank you, Jim.
Okay, thank you.